Today I'm joined by currently two people. The last person is still on their way through the crazy Brussels traffic. But I'm joined by, firstly, Elise Carton, Senior Manager Venture Deals at PwC Belgium. Elise has worked to support European innovative companies in their quest for commercial growth and fundraising. I'm also joined by Thomas Lepelaars. He's here with us today. He's the CEO and co-founder of Nodalview. It's a powerful sales and marketing platform built for the real estate industry. And the last person that will join us soon is Nathalie De Schepper. She's business coach, founder and crowdfunding expert. She has experience as a startup advisor and likes to challenge business ideas. And she has created her own clothing brand called Tiny Dreams, which is for women under 165 centimeters. Today's a bit of a different format as we're not just talking to entrepreneurs, so we'll focus on three broad subjects: finance, time management, and expertise. But first, let's get to know our speakers a bit more. So, Elise, can you tell us what it is that you do for startups and how you work with them?
Yeah, sure. So I'm responsible for our venture deals team at PwC, which means what's in a name that we support in venture transactions. Venture transactions can be on the founder side, where we support to raise funds, where both in the preparation phase, making sure there's a solid financial model, an equity story, a great IM, a reasonable valuation, but then also all the way through leveraging on our network, reaching out to investors until the deal is closed. We're also active, maybe less relevant in this context, on the other side of the story, so corporates and investors throughout their investments in startups, which usually is the case when they're not really used to investing in startups, but focus more on mature companies. So yeah, everything finance related is my focus.
Cool, lovely, thank you. And Thomas, can you tell us a bit about your professional background and how did the idea for Nodalview come about and what added value does it bring to your customers?
Yeah, so Thomas, co-founder and CEO of Nodalview. We started Nodalview in 2016 when I was 26. So before that, I did a bit of websites, a bit of programming. We actually started with the idea of Nodalview to help reinvent the buying experience in real estate. So we kind of wanted there to be a stronger, more connected buying experience. And we started in 2016 developing solutions that allowed to build 360-degree immersive experiences with a very big advantage that we were leveraging a smartphone and smartphone technology as the only capturing tool. So we really thought that would be a unique position to help real estate agents deliver this awesome experience to really change the way people find a place to call home. So we started that in 2016 and we've grown to a team of over 80 people, which are here today. We've raised over 10 million euros of capital from investors across Europe. And we continue to deliver our product across Europe because there's a huge need for people to indeed increase and bring just a better real estate experience in general.
Sounds great, thank you. Well, on to our first topic, financing, which is a very tough subject and a very prominent subject, I would say, amongst startups and people that, really in those very first steps of starting out with a business. Elisa, what do you see, from your perspective, how are startups tackling this subject? Are there commonalities or general trends that you see from your point of view?
I think on the challenge part is usually what I often see is that it's underestimated how much time it requires to actually find an investor and close a deal. And in line with that, often people start raising money just too late. And of course, if it's like, if your run rate is becoming smaller and smaller and you need to start negotiating while actually your company is on the line, you're not in the best position. So that's something that I think is really important for founders to take into account, especially in the current environment where there's still a lot of investing happening, but it just takes like a month, 2 months, 3 months longer than it would have taken in before 2020 or in the years of 2020 and 21, which were really big peak years still. So I think, often underestimating the amount of time, and then starting too late because of that. Is something I definitely see. But overall, there's a bit of worry sometimes on, is this the right time to raise money? What's happening macroeconomically? I think there's still a lot of money out there in the market. So if you have a good product, a good team, it's still the right time to look for funds for your business.
Okay. And why is it, do you think, that they're starting too late? Is it they're not making a priority of it enough? Or are they too scared to make that step?
I think it's just a matter of a good founder focuses on the product, on the people in the company, and then unless someone has a finance background or is really a number cruncher, finance is often just something that isn't the priority or that's put a bit on the side. And then if you think of, okay, money's running out, so now we need to go look for it, you can't expect a founder to be good at product building, team building, sales, and also, again, finance. So they're not superhumans either, although many of them are. But so I think it's more the lack of knowledge about finance, and just it's usually something that founders have less affinity with, unless they have a background in finance, of course. Yeah.
Okay, super. I think, Thomas, it's interesting from your experience. And how have you done the funding for the startup in the beginning? What was your approach? How did you do it?
So I think we're a tiny bit atypical in that sense, because traditionally a startup, you'd have a couple of people come together, build a minimum viable product, often seek money even before the product is built. And so a lot of startups run their operations being venture capital backed very early on before even generating revenues. If you look at the story of Nodalview, we did it a bit the other way around. We actually started building a product ourselves. We're lucky we were, all co-founders were from a technical background, so we were able to actually invest the biggest part of a startup foundation, which was development time ourselves, and a lot of endless sleepless nights, of course. But so we started building a product very early on, and we were able to put it in the market very soon. So early 2016, we were already bringing in customers, which means that we were already earning money. And we actually waited 3 years before we raised our first round. So we were doing a couple of €100,000 of revenue already when we raised our seed round with Volta Ventures. And so for us, we probably didn't have that issue that we were running out of money, because we were actually profitable before going to search for funds. So I think our particular story is a tiny bit different. And I think it also put us in a position where we were very lucky to be able to choose our investors. So this was back in 2019 when we did our previous round, which was still normal times. It was before the COVID spike. But so I think preparing, I definitely agree with that. Preparing the round, understanding why you're raising funds. A lot of people think that raising funds is also the destination, but actually it's a necessity sometimes. Mm-hmm. And a lot of people also seek a lot of success in raising funds, which it certainly is on one side, but it also means that you need money to finance your operation. So I think a lot of people go to look for funds not always with the right reason in mind. And people see announcements in the press every day, so you feel that it's easy to raise money, that it's awesome, you'll have this great venture capital-backed company, but it is really hard, and people definitely underestimate the amount of time you put in. My personal advice for that would be indeed to prepare it very well, and then to really target the people you go afterwards. So I think there's thousands of venture capital firms out there. Understanding which ones can really be of value to you and your project, and then identifying a select group of people and really leveraging the reason why those people would be interesting for your specific company is definitely interesting. Our specific strategy was to go for a local fund, so looking for support of a Belgian VC who had the experience to bring companies outside of the Belgian ecosystem to scale internationally. And that's how we selected a couple of very select funds and ended up having a very successful seed round with Volta Ventures from Ghent in Belgium.
And congratulations on bootstrapping that long. I think sometimes it's much more applauded to raise and burn 5 million than to get to a certain ARR. Well, it actually should be the other way around. So
a bit atypical, but it did put us in this very comfortable position to understand that our business model works. I think especially now when you see the market going a bit on the other way around, some startups are really in a very stressful position because they've never had a business model that works. And so they've kind of been subsidized by easy money, skyrocketing valuations, too much dry powder on the market. They've been burning through money without having like a profound, healthy business model. And so I think that's one of the things that we wanted to prove before we went and raised a round, which is also why we raised back then at least, it was a significant seed round of 1.7 million, which is typically bigger than what, at least in 2019, you would raise, which was more around 500 to a million range. But yeah, it definitely helped us also understand all those dynamics, although it's not easy. And if we were to do it again, I would probably raise a bit more money a bit sooner, but that will be for the next one.
Yeah, nice. So was it actually then a very conscious decision from the get-go where you're making a product that we want to make something that first has that steady income, that we're self-sufficient, we don't want to bring in extra partners?
Yeah, I think so again, contrary to what most startups have, is we didn't have this amazing pain point or this story that says, I woke up one day with this massive pain point. No, we were kind of just a bit excited by the technology of virtual tours, and we really thought that it could bring a significant impact in the industry. I remember moving around when I was younger and following my mum to these places that had horrible pictures and then just going home because it really wasn't what we were looking for. And so we were just thinking, okay, we can build and bring value to the industry. And that's always what drove the project, and that's how we built Nodalview over the years. We didn't start Nodalview by saying, okay, we want to raise funds. And I think that's what also a lot of entrepreneurs sometimes do, is they dream of a big exit or they dream of raising funds, and then that drives their decisions. Whereas I think the true entrepreneurs, they always want to build value, exactly like you were saying, they want to kind of build something. And I think that's what always pushed us to build Nodalview. And then at some point we realized that there was a true moment where we could accelerate, where it made sense to get into external investment to really push the barriers of European markets. And that's when we decided to raise money.
Nice, cool. Going on to the next topic, time management and making that first step. So Elise, after talking to various business owners myself, I've heard a lot of them talking about time management, and that it's very difficult to juggle all the roles that they have and everything they have to do, especially in the beginning. How do you experience this, and how do you advise startups when they're struggling with this?
Yeah, I think it makes sense if you build a company from scratch and in the beginning you're just a few people, that it's your baby, and I can imagine that people go into kind of micromanaging mode when more people join the club, and it's difficult to hand over things. But basically, being able to delegate only works if you trust the people around you. And I think that often we see the startups making the mistake of trying to save money on people and getting only very junior people or only people without any experience. And I think you need both. You need to surround yourself with people with experience that have worked maybe a few years longer than you, because that will facilitate building trust and will allow you to delegate a bit more, trust people to take over something else. So yeah, I think that's crucial. Not trying to save money on only hiring very junior people or very young people. To go a long way, you need some experience as well.
Great. Thomas, I'm curious to get to know that.
I 100% agree. I remember one of them, when we were closing our seed round with Bolt Ventures, there was this critical moment where I was sitting in the office with Frank Mann, who sits on our board today from Bolt Ventures. And he was kind of saying, okay, we're going to invest this amount in your startup, but are you going to be able to spend it? And kind of his main concern was, are you going to indeed spend the money? Are you going to invest it in hiring, in talent? And I think it's still something today, 3 years later, that, and it makes a lot of our board discussions of, you have to hire senior people that really help you accelerate, but also bring structure inside of your company. And it's definitely kind of one of the pitfalls is assuming that you can take on a lot by yourself, and then seeing experience profiles, which of course come with an expensive price tag, and kind of seeing on your P&L what it will have as an impact, and being like, this is really a lot of money. And I think it's a mindset you have to get into, of hiring people that really help you accelerate and take shortcuts. But it definitely is difficult for a founder to kind of, often you don't pay yourself, and you see this high cost on your budget, and it is difficult to do. But I think at some point you really realize that it does have a significant impact. And if you really want to continue to grow at a certain speed, bringing in that expertise is just, is absolutely necessary.
And it's about knowing your strengths, I guess. For instance, what we do support startups when they're raising funds. I think as a founder, if you feel like I'm really horrible at financial modeling or making business plans or things like that, don't spend money left and right, but really consider getting an advisor on board on the things that you're not good at. Because if you pay, just a hypothetical round number, 100 euros for an advisor, and you're only thinking about 100 euros an hour, that's a lot of money. You should actually think, how much money or value am I creating if I'm not working on that financial model? And usually you're going to figure out quite quickly that it's a lot more than being the number crunching if there's no one in your company that can support that. So yeah, really considering the time, what you put it in, because you only have 24 hours a day. So at some point you need to start delegating or change your time management, because time is one of the things that's really, really limited anyway. So
yeah.
I definitely think that's how you should also select your investors. I think that's when you're looking for extra expertise and looking for people to really help you. Beyond just looking for money, people always talk about smart money. It's really finding these people that can come in as advisors and really help you. They've done this with tens of companies before, so they know kind of the weaknesses, they know where you should focus on. And I think that's definitely what a lot of entrepreneurs should be looking for when they are raising money, is who can really help, not only just, of course, bring money to the table, but bring that expertise to help you make the right decisions at the right time.
Yeah. Okay. Nathalie, hi. I'm so glad you were able to join us and get through the crazy traffic.
Yeah, thank you. Traffic from Antwerp, always horrible.
Oh, lovely. But very welcome, very welcome. I've already given a little bit introduction about yourself, that you're a crowdfunding expert and also a coach for startups, and you like to challenge business ideas. And we spoke a little bit about financing amongst startups, so I'd really like to hear from you what your experience is as a crowdfunding expert. Like, how do startups tackle that? Or what's your experience with that?
All right, so I don't know yet what's been said already, but I do hope that I can repeat what you guys already said a bit, and also explain a bit more about crowdfunding, because crowdfunding is always something that I use as a way to fund startups in combination with a lot of other funding methods. So for me, crowdfunding is not just a one-off thing, but it always should be combined with other types of funding to get to your goal. So crowdfunding, there are multiple types of crowdfunding. So first of all, you have reward-based crowdfunding, which is more used for product-based startups, where you can put your product out there, or could also be done with a service, but it's a little bit harder. And then you get to raise money, and people actually receive your product as a sort of preview of what you want to bring to the market. And then you have two other main groups of crowdfunding, which are more financial types of crowdfunding. Crowdlending on the one hand, where people give a loan to a company. And yeah, it could be any individual, and it starts from 500 euros already. So it's really accessible for everyone to also invest in companies that way. And then equity-based crowdfunding, where you actually buy shares. And then there's still a hybrid form between crowdlending and equity. So there's also crowdfunding with convertible loans. That's also a possibility. So those are all the different types of crowdfunding. And first of all, it's interesting for yourself to see, is crowdfunding something that I want to do? Because it also takes a lot of investment in a marketing campaign, in being transparent about your numbers as well. So that's something that you must want to do. Also checking out how much are you going to raise through crowdfunding and how much are you going to raise through other channels. I think a common mistake that I see with a lot of startups is that they fund too little, like the total package, I mean. They think about funding and they only see the short-term goals. Whereas if you are looking to raise money, it's important that you also see the long-term perspective. And when you fund too little, then it's just a band-aid on a bullet wound, and then you will have to keep on funding, doing one round after the other. It's really exhausting for you and your team, so it's better to have a long-term strategy and to know what you're funding for. And crowdfunding can be a part of it. It can also be a lever to get access to other types of funding. So if you have a successful crowdfunding campaign, which is traditionally, crowdfunding is a little bit more accessible than when you go to a bank or investors, then you can use it as a lever to convince them to also grant you money. So that's how I typically use crowdfunding in a nutshell.
Okay, thank you. But it doesn't seem, talking about the long-term vision and being transparent with your numbers, I don't think that's very different from the investment rounds that we were talking about previously.
Yeah, except for with crowdfunding, you have to be transparent to the whole crowd, not only for investors, and that's a bit of a difference.
Yeah. Okay. But curious, is it like the difference in then those long-term plans and stuff, I assume as well?
Yeah, we usually advise to raise money for 18 months. If you raise money for a lot longer, then you're paying a lot for that money because equity is something you give up as well. But if you start raising money for 6 months, then it becomes quite exhausting, as you mentioned. So that's basically the horizon we look at when supporting a fundraise.
Cool. And Nathalie, I also introduced your your business. I should say your business.
But it's for a little short.
Yes. Tiny dreams. Yeah. So I was also just curious how you handled, the funding for your own business.
I have a product business, a clothing line. I also have a service business where I advise businesses on their funding. But for a product-based business, like the biggest pitfall is the cash flow. Because you always have to finance your collection upfront. Like I design my clothes myself, and then they have to go to a manufacturer. You have to invest in samples, then you have to invest in the production, and the money is only flowing back when you actually go in market and start to sell the collection. But of course, you don't sell everything overnight. So you always have to have a sort of buffer already, also ready for the next collection that you have to invest in. And that's why I opted for reward-based crowdfunding, which I did when I started up my brand, to create a sort of financial buffer, because I could just use the money of the crowdfunding to already pay for my first manufacturing runs, as I like to call it. And that way I still had room to invest in my brands and to invest in next collections. So I had this buffer, and I don't had a cash flow problem from the start, which you see with many clothing brands. It's also a difficult industry because the margins are really small and under pressure. So that's why I really wanted to go for what I advise other startups to do, like create that buffer. And that's, then reward-based crowdfunding is nice if you have to invest in a stock.
Lovely, thank you. I also think lots of the audience, also online, are people with ideas that maybe don't know how to make those very, very first steps. They're often still working, or maybe even studying, not sure how to combine and, when to jump, when to go full in. It's always a question of staying in a job where you have some steady income, but not being able to be as focused, or going full in and being able to give all your time to that and make it grow as fast as possible. So I'm curious to know how each of you, would advise or do advise startups. Like, at what point do you say, well, go all in and make that jump?
Yeah, I usually advise startups that already passed that phase, so that are really looking to accelerate. But I think looking at some of the startups that we worked with, hearing their stories from back when they started, I think what's crucial is what problem you want to solve. You haven't figured out 100% yet how you're going to solve that problem. But what is crucial to know before jumping is making sure that it's a problem that is valid, that other people are actually also looking for a solution, or that it can add value for other people, that it can create a better experience than the experience that consumers already have or companies already have. But there's a big mistake in jumping before you're sure that you're just not sitting on a problem that's your own and no one else's. I think that's crucial. Having that, I wouldn't say product market fit, because that almost implies that there's already a ready-to-go product, but that problem solution fit, kind of, or problem market fit, let's call it that way, that's important, because otherwise it's a very risky jump.
Yeah. Okay, and Thomas, at what point did you make that jump? Or
I think it's, being an entrepreneur, it's basically taking a risk. It's taking a leap of faith in either an idea or a product or something where you have to pour a lot of your energy in. So it's definitely taking risk. I think that's also what people like in entrepreneurs, that people do take risks. A lot of people say, "Oh, I should have started. I had this great idea. I could have had a Facebook 20 years ago," which is of course always easy to say. And I think there's a real difference between making the jump and really doing it. Of course, it's much easier to be an entrepreneur when you're 20 something and you can still live with your parents, or you don't really need a lot of money. It's much more difficult to be an entrepreneur when you're have to support a family and have kids and stuff like that. So it also depends, I think, on the moment of your life. I think it's also some people just have this itch in them where they want to become an entrepreneur. I don't know if it's a good advice. The only thing that I can guarantee is that whatever the outcome, whether it's positive or negative, it's an incredible ride. And I think a lot of people maybe don't have a positive outcome, but the personal learnings you get from being an entrepreneur are just so amazing. And you really have an accelerated personal growth and always an incredible story, which you also see with people failing but still being able to start again afterwards. So it's definitely, for me at least, worth the sacrifice.
Okay. And Nathalie, I see you nodding vigorously with everything that's being said.
But yeah, there are some really valuable lessons to be learned in entrepreneurship. So I agree that even if you start something and it fails, it's still something that's worthwhile. But what I use as a sort of framework for the people I advise whether they should jump or not in an ideal situation, you can take some calculated risks. And I always ask them to test with a proof of concept and an MVP. The proof of concept tests the feasibility of your product or service, whereas MVP, the minimum viable product, is going to test the user experience. And I think both these things, if you can test them up front, you should, to see whether you can validate your concept or not. But of course, it's not always easy to do a proof of concept testing, especially when a lot of research has to be done and time has to be invested. And then I feel like look for the right partners and maybe also work on a partnership agreement with someone that can support you in the research that has to be done, that has the means, the resources, like sort of a key partner, and that maybe can also pay you a bit while doing the research. So looking to collaborate with people would be my advice for individuals who have an idea, who want to start a business of their own, but who fear the uncertainty a bit, and who are like, but I still want to go on with my idea. No.
I definitely agree with that. Like people saying, "Oh, I have this idea, but I don't want to speak about any about it because I'm afraid someone will steal it." It's probably the worst idea ever. And talking about your idea, explaining what it is, getting early feedback is the most valuable thing I think you can do to kind of guarantee that you do have something that is valuable, that does have merit to be launched. I think it's definitely something that people should not do, of keeping those ideas for themselves, working on it for 6 months, and then realizing that there's indeed no market for it. Or
Yeah, we've heard that a lot on the StartUP stories of people saying, don't keep it to yourself, test, talk to people. You know, obviously don't give everything away, but yeah, try and talk. Right, on to the final topic, so expertise or network building. Nancy, how have you built your network around you? Have you found the right people to help you? And how have you decided what to delegate and what to do yourself?
There are a lot of questions in one. But I'll try to cover them all. So first of all, I started networking relatively early, or some of you might think it's not early, but for me, relatively early. So when I was 20 years old. I was still in university, so I was still a student. But back in the days, I already felt like it's important to connect with people in the business world and to see how things are going and what people are doing, what the latest trends are. I also was part of SYNC, which is in Antwerp, Organization Students for Innovation and Cooperation. And we had just started the organization to support student entrepreneurship. So I was already involved quite early in the days when student entrepreneurship wasn't that popular. So back in the days, there were like in Antwerp 40 student entrepreneurs, official student entrepreneurs. Now there are over 1,300 right now. So that's a big difference. But I think when you have to look for the right people, of course, sometimes you need to look for a specific person. But I think if you position yourself well in the market, And if you want to build a good network around you, then the people automatically come to you that you need. So it's something that you cannot force. What I've been doing since I was younger is I always wanted to give value to others. Like, first give a lot of value and don't think about the wins or the take for yourself. And when you have this reputation, when you're networking, people, any type of people will come to you, they will ask you for advice, and you have this whole circle around you of people that you genuinely helped, and it always comes back in one way or another. So I think with networking, it's about building relationships, not about business transactions. And a lot of people, when they go to network events, they're like, okay, what's in it for me? Who's there? Who can I manage to talk to? And what information or contacts do I need from them? But I think it should be the other way around. Just like go to a network event with an open mind, of course, with the context in mind, what the topic is of the network event or the people that they attract. But you should just listen to people, because listening to people also gives you a lot of insights about things that are going on in industries. And go to networking events in different industries. So not only in the one that you want to end up in or the one that you have a business in, but step out of the comfort zone, because cross-industry innovation is one of the biggest accelerators of startups. And I think that's a really valuable lesson for me as well, that going to events of other industries than where I feel comfortable or the one with the most knowledge is a lot more insightful than the other events. So that's for networking events. Yeah.
Super. Elise, from your perspective, how do you see the most lucrative startups grow actually, after this mention of the cross industries?
I think a lot has been said on the being in continuous touch with your potential clients and asking for feedback. I think that loop is super important, and for that you need a network. And I think it makes sense to not keep a secret what you're working on, and in that regards, not always be in sales mode, also just be in feedback gathering mode, asking people's opinions. That's often very appreciated. Also in my business, I think networking goes best if you just take off your sales hat and speak to people and try to connect. And then it's like planting seed, and someday in the future, you might be able to help each other out in a more commercial way or something. I think adding on or agreeing with what Nathalie says, don't focus too much on getting an immediate return from networking. It can be feedback that's really valuable. It can be being brought in touch with someone else. And also networking is giving and taking. Don't expect everyone to connect you to the world or spend hours giving pro bono feedback on what you're doing. But think about what you could offer instead.
Thank you. No valuable insight. And somehow a bit of a different angle, but with the current war on talent, what do you think is important for startups to still be able to find the right people with the right knowledge without being not being able to pay very high wages for very expensive experts? So
first of all, 100% agree on the networking aspect and like the feedback, because I'm really bad at networking. But for the talent question, I 100% agree. Even if the markets are becoming a bit more difficult, that we see that companies are probably going to hire a bit less than what they anticipated. I think the war for talent is always going to be ongoing. It's a bit what we said in the beginning, right? I think having the right people really helps execute on a plan and just brings focus in a company and helps bring good direction. So I definitely think it's important to hire the right people. I'm also convinced it's the most difficult thing to do when starting, and especially when you have to grow at an accelerated pace and everything goes so fast. But even there, I think the networking aspect is also super important. For example, at Nodalview, we set up a program where people can recommend other people to join the company, and actually the best hires we've had at Nodalview came from that recommendation. So I think this networking effect, you also have it for HR, and that's also how you meet some really, really good talent. And so I definitely think that it is important. And on the compensation question, some people say that venture capital companies used to at least overpay, some say underpay. You always have different compositions, I think, in the package. definitely, if you're just after a paycheck, maybe startups are not the best place to work for, but I think that doesn't also fit with what you really want to have in your company. We typically try to find people who are super curious, who are passionate, because that makes kind of great entrepreneurs who can then kind of drive value in the company. But I think you can compensate that. We've seen people join startups either earning more than they were actually in a traditional company just because they can grow faster, they can get faster promotions. And we've seen people just accept to take a salary cut because maybe you have a better work-life balance, maybe because you have just something that you're working on that you're much more passionate about, or because you're just kind of willing to swap that in for equity or for other sorts of advantages. I think one thing that we've really noticed over the years is salary is definitely not the first driver in the decision of joining a startup. Maybe it's because it's what people want when they join a startup, but it's not become the primary component of joining a company. I think more and more people are looking at the impact, what the company does, also how the company treats its employees, the values and stuff like that. So I think those are becoming more and more important in that war for talent.
Yeah, and I can confirm because I was part of a research at the university college I work for, KBG in Antwerp. And we also did an interview with young professionals to see what were their main drivers. And yeah, money wasn't on top of the list. It's like more the culture, the experience, and the ability to learn and to grow their personal development. That's far more important. And concerning startups, I think the grit and the attitude someone has is far more important than the knowledge and experience that they have already acquired. I don't know if Thomas can.
Yeah, I think, well, of course, I'm a bit preaching for myself here, but I definitely think that, at least in my perspective, what you learn in 2 or 3 years in the startup industries or in a startup is probably worth 5 or 6 years of experience in a traditional company where you probably don't have as much autonomy, you don't get to manage budgets, you don't get to hire your team. So I definitely think that the industry also values a lot more people who have gone through a startup experience. When you see more traditional companies that are a bit fascinated by this culture of innovation, being able to take action. And I think you see that that's easily done in a startup environment and much more difficult in a more corporate one. But all the corporates would dream to have kind of that culture of innovation, that ownership within the team. So I think it's something that's very valuable. So it's definitely also something that you can value in your kind of a professional career. But yeah, 100% agree that we always probably tend to hire, to what we were saying before, young, passionate, ambitious people, not because they're cheap, but because they have great potential to grow. But indeed, it does have to be also balanced a bit with some more senior people. But yeah, 100% agree.
Great. Thank you so much for the insights. Those are all the questions that I had. So now it's time to turn it over to the audience here if they have any questions and anybody online. But I'll first have a look here if there's anybody with a specific question. Not immediately. No. I've got some online. Yeah, if you can scroll up. Okay. Can everyone be an entrepreneur? What does it take? Who'd like to have a stab at that one? Nathalie?
Yeah, I'll go ahead. So I don't believe that everyone can be an entrepreneur. A question I get a lot from my students is an entrepreneur, is that something that's born or made? And I think partially being an entrepreneur is something that you can train. You can train people to be more entrepreneurial, to have a more creative mindset, to become real problem solvers. So yes, a part of that can be trained. But there's also a part of the population that I believe that are so resistant towards uncertainty, that need stability. They are never going to be a successful entrepreneur because they just don't have it in their nature to break out of that shell. So I think for a small part of the population, they're never going to be an entrepreneur. And then for the other part, some are natural entrepreneurs who just have it in them. It's second nature to them. And then the whole other bunch, you can definitely train them to get a more entrepreneurial mindset. That's my opinion.
Agree? Disagree?
No, 100% agree. Definitely think entrepreneurs are awesome people, but I definitely agree. I think it's you have to be willing to take a risk. Not everyone is a risk taker. and you have to be willing to sacrifice quite a lot. It seems a bit cheesy, but it's true that you do have to sacrifice quite a lot. And I think people underestimate what it is to really build a business, navigate growth in difficult times and so forth. And so it's definitely not for everyone, because not everyone has that same appetite, or not everyone is willing to make the sacrifices, which doesn't mean that's a bad thing. But I think it's definitely, you have to have a certain character to be an entrepreneur. So yeah, not everyone can become one, but definitely think that anyone who is passionate, who has grit, who is kind of hungry, can definitely become a good entrepreneur.
Super. A question for Thomas: how do you see the market demand, market in general?
So if it's around real estate, it's probably going to be tough times, but I still definitely think that it's an awesome time for technology companies, because they can really grow in these tough times. It's exactly what we were saying before we started. It's actually, these are the times when great companies are made, when markets become more complicated. And I definitely think that there's room to grow for any technology company. So I think there's still a lot of demand for tech companies. There's still a lot of money in terms of dry powder in the investments. There's still a lot of money that is currently just being held on because people are not sure in which direction it's going. But there's indeed a lot of dry powder in the industry for people who do want to raise funds. So I definitely think there's just still global demand. It's just that times are going to be a bit tougher for the next coming months, indeed.
Yeah, I think it's been really great times the last few years, maybe a bit too great. I think I'm not saying it's a well-needed market correction or anything, but I think it's more if you have a good product, if you have a must-have product, if you're solving real issues, real problems for companies, for people, for consumers, then with the right managing of the situation, you'll be absolutely fine. I think there was a lot of nice to haves that were getting a lot of money. There was never the question of, when will you ever be profitable? Does this actually make sense? Will this actually ever be profitable? What does it take to make this company profitable? Those questions were never asked in the last years. And I think it's not a bad thing that they're asked right now. I'm sure it will be tough times for all. I mean, whatever industry you're in, I don't think there's much industries that feel like this moment or the next 6 months is really their winning period or something. But then on the other hand, it will create a lot of resilience for companies that get through this and can bear the next storm, because there will be other ones coming as well in the future. So I think it's an interesting period, but not necessarily all bad.
Yeah. Completely agree. Lovely. Can you scroll down for the other questions? I can't see them. Scroll down. Yeah. Does innovation right now lead to better profitability? I think that question was more or less just answered. And what is the most important thing you see in a startup from a venture capital perspective? So what is the most important thing you see in startups from a venture capital perspective?
Speaking to a lot of VCs, I think I can answer that one. The number one is always team. It's very simple. It's the trust in the team. If you're investing in a company that is stable, has been stable since forever, has had like the same revenue growth forever, the same margins, you're investing in that company. You're investing in that product. You're investing in the operations around it and in the performance that it has continuously be able to build. If you're investing in a startup, all of that is not there yet. So there's only one thing that will make that happen someday in the future, and that's the team. I think most investors would agree that they rather invest in a horrible product with a good team, because that team will realize and switch the product around at some point, than an awesome product with a team that has no clue what they're doing, because that will fail in the end eventually. So team, and then I don't like to say market size, because then people start calculating all these formulas with market data that you can plug and play and make it as big as you want. So maybe not necessarily market size as an amount, but more market size as in, is it big enough? And usually, that means that it's very scalable, that it's an international thing that you're solving, that it's
Thank you for the insight. I can't see any other questions. In the meantime, from the audience here, any other questions? No, don't be shy. Oh, sorry. Second. Is there a quote, an idea that inspires you to grow? Anybody have a quote?
I don't know if it's a quote, but I think it's a think different from Apple. I think it's definitely something that's really good, kind of really shows this kind of mindset that you need to have in an industry in general, whether it's in good moments or bad moments. I think that think different is definitely something that you also, a kind of culture you want to have within your startup. So yeah, I would say that would be mine.
Nathalie, do you have anything else to add?
Yeah, I don't know if it's an official quote or something like that, but something that I've read, came across, and I always remembered, and also trying to spread that message that being an entrepreneur is like jumping out of a plane with a broken parachute, and you have to try to fix it before your time. And every time I see a mountain that I have to climb or a hurdle in one of my companies, I'm like, okay, just another parachute that I need to fix. But it gets fixed because I've done a couple of times in the past, and I will do so in the future. And it's, yeah, you also got to have trust in yourself, believe in yourself and your entrepreneurial skills. So, yeah, that would be mine.
That's a good one. Okay. Sorry. Is there a specific threshold when the entrepreneur should decide to just go to the market, not spend too much time preparing and not launching?
I would say as soon as possible.
I agree. Yeah. You don't have to think about it. And not being like the market with a big marketing campaign and a launch event, but the market as in go knock on some doors and ask what they think of what you're doing immediately.
There you go.
I think there's a question over there as well.
Yes. Go ahead.
Okay, so this goes to the three of you, but if you were to give one piece of advice to a young struggling entrepreneur going like, I don't know if I can make it, yes or no, should I give up, should I continue, what would that be?
So just for the people following online, the one piece of advice for the young entrepreneur struggling, not sure, like, do I go for it? What do I do? What piece of advice?
I'm gonna steal one that I saw in a keynote from Yuri Levine, the founder of Waze. He said basically there's gonna be a lot of ups and downs when you're trying something new, whether that's launching a startup or within a company doing something entrepreneurial. There's gonna be a lot of ups and downs. So basically go full in on the downs. Don't try to avoid them. Don't try to postpone them. Whatever challenges are coming your way, they were gonna come your way eventually. So all the struggles that you're having, it's better to face them head on as they come than to like try to postpone them or not undo a bad decision or realize that you made a bad decision. Or so I would say don't hesitate to tackle the challenges because sometimes we try to avoid them.
Yeah, I definitely agree. I think, if it were easy, everyone would be successful. I think also it's important to understand that a lot of entrepreneurs, even successful companies, have had some really, really difficult times. So a lot of people go through actually more often difficult times than good times. There's always this comparison that when you follow an athlete on Instagram, for example, you always see the records, you always see the medals, you always see the positive things. But what you don't see is kind of the hours that have been put in training and in making the work, the downs. And I think it's also reassuring to know that it's okay for sometimes things to be difficult. But that's what makes great entrepreneurs. So I would definitely not say to abandon. I would definitely say to continue to push.
I don't fully agree because I think it's a bit challenging now. But I think it depends on why you're not sure or why you're struggling. I mean, are you struggling because the market doesn't react the way that you thought they would react? Because the feedback isn't what you hoped for? Or are you not sure because you don't feel passionate enough? Depends on those types of things as well. I won't always say just go with it because sometimes it's just it can be the right entrepreneur with the wrong idea or just someone who's not entrepreneurial with the right idea. And I think that's something that you have to reflect on yourself. Why am I struggling? And then put it down, write it down. Why am I struggling at this point? And then, it depends. If there's no demand on the market, for example, then I certainly wouldn't advise to go further into the project. And if you're not feeling passionate enough, then this is just not your idea. It could be your idea, but then it's maybe better that someone else is executing it. And you should always, when you start a business, it's hard enough as it is. It should be something that you're passionate about. Yeah.
Okay, there's some great advices. And then one last question online. So coming back to what you said, Elise, about teams and trust and that being the most important, is that also what startups focus on?
I guess, the question probably comes from the what do VCs focus on, where I answered team. I think sometimes yes, sometimes no. I think sometimes 3 great technical people can have an amazing idea together and develop a product or a proof of concept, and they don't really realize that their team isn't very complementary. They don't identify the need for someone more commercial or someone more business, and then that's of course a pity. And then coming back on the quotes, I mean, I hope they walk against the wall as soon as possible, rather sooner than later, because then they can pivot that or think that through and change that. And sometimes, and I hope more often, when people start a company, they really challenge the complementary, how complementary the team is themselves, and feel the need. If you studied marketing and you're with 2 people that you got along great with at university and you decide to start a startup together, I hope that at some point there's a reflection, but we're 3 marketing guys. Are we doing this right? So sometimes yes, sometimes no, it depends.
Yeah, and if I may add to that, I think complementary is definitely important, of course, but what's even more important than complementary is the fact that you have the shared vision, that you all want to steer your company in the same direction. Because if you have other opinions about where you want to end up with your company, then investors or venture capitalists, they're going to notice. They're going to feel it when they see you pitching, when they do Q&A with you. So I think shared vision is the thing that's most important when it comes to teams.
Okay, thank you. Last look before we wrap up. Nobody, any other questions? Nope. Then I want to thank you to everybody that joined live and online. I want to thank each of our speakers. Thank you, Nodalview, also for hosting us today at the office in Brussels. I also want to take a moment from Value Network to thank our whole community, our audience that follows our online events, the people that have been at our various flagship events throughout the year, the Innovation Market, Smart Cities, the LIAs, Startup Warm-Up, and thank you to all our partners. That's Kronos Leuven and the Raccoons, Started at KBC, EEBIC, 50 North Ventures, TMC, Comate Engineering and Design, Broadcaster, KU Leuven Kick, City of Leuven, UCLL, and of course our main partner, Leuven Mind Gate. We wouldn't be here without each and every one of you. So happy end of year holidays, and we look forward to seeing you again in 2023 for another event and another edition of Startup Stories. Thank you very much and have a great day.